welcome from our side. I'm Tina Willibald from Swisscom Ventures, and we have beautiful guests here today. We have founders, we have investors, and today we talk about the value add investors can truly bring, also in different stages. And I also encourage you to ask the critical questions, and we're here for you to transport as much know-how as we can. So I introduce you to Max Rothenberger. He's now CEO of SpaceTech, one of our portfolio companies. They started in the space industry, now producing products for the semiconductor area, and very successful. Being here in Bern, we'll talk about more yourself then. Then we have Rico Dehler. He's heading the business development team. We also have Bernard Chakar here from our team. They're really full-time there for our portfolio companies, making them thrive and opening all the necessary doors. Then we have Sandra Tobler, from Futura Technologies, and that you built and led as CEO now for 7 years, and a very recognized cybersecurity company. And you're also in the steering committee of the Swiss National Cyber Strategy Team, advising how Switzerland projects, advising there. I think more you tell them more. And Sascha Horig from Equity Pitcher, also started with 20. He's being independent, founded more than 4 companies. One of them is Equity Pitcher, one of those leading VCs also in the DACH region. Welcome on stage.
Hi.
Then let's go into medias res. So Sascha, let's start with you. What is value add? What does it mean when you come in as investor with money? What's the extra?
Yeah, for me, this value add has really a high importance, because when I started my first company, it was beginning with 20, and I always had external investors. So it was always for me to see and how to work with investors. So in the first stages, I did my own building up companies on an operative level also. And then later I changed as a purely investor, started to only invest in companies. And from back then I would say it like this, the most negative experience, or in other words, the most money I lost as an investor, it was always when it was always a good team and the idea was right, but if there was not the real market know-how behind it, so knowing what's the real problem, what I want to solve, then it became a problem. Because this always ends then that you just don't sell your product or your service you are creating. And for this, it was very clear for me then when we started Equity Pitcher together with my teenage friend Herman, already 10 years ago now, that we really want to invest only in companies and markets where we have the know-how, and especially the company can have a deep know-how of the market. And of course, the founder has to bring this, but for us it was key that we built up like an advisory board that really can set up a transfer of knowledge to our founders. So we started already with the due diligence to take these advisors and get their knowledge and helping us to evaluate the companies. But then in the second stage, we brought them into the board of directors. We brought them to help these startup strategic decision makings. And I think that's one of the reasons we made in the meantime now more than 40 investments. We lost 2, but we hear very often it's only 2, because most of companies really found their way to sell their product and create revenues, and everybody knows the most important to achieve is create traction at the end, because every 12 to 24 months you need in general new capital at the beginning, and to achieve this and to find and attract new investors, you need to show traction, and there the revenue creating is so important. So in the meantime, we really set up everything. We have in the meantime now around 50 advisors from different industries, and out of the 50 advisors we have like contact to more than 500 C-level decision makers, mainly here in Switzerland and Germany, and this 500 C-level decision makers are allowing our startup companies to really go there and pitch directly. And this helps a lot. Someone who did like cold calling or cold emailing, no, it's not easy to get to the decision maker. And if you can save this time and really be at the right decision person, this helps a lot. And that's what we really created in the last 10 years, that it's very structured, very professional. And I think that's our main value add in the meantime.
Thank you. I would love to do immediately the reality check with you, Sandra. being a portfolio company, what's your experience with this advisory board?
I mean, I was, first and foremost, we started 9.5 years ago, and there was nowhere someone who understood cryptography, cyber. So we had numerous investor meetings in Switzerland. Nobody understood technically like what we did. We had very good references already. So it was really frustrating. It was the worst. Our Series seed round was really the worst. It was very horrible. Because it was just so frustrating not to be able to have a counterpart that speaks strategically. So we came across Sasha and Herman from Equity Pitcher, and finally I found people that found it themselves, and that was back then very rare. And we always focused heavily on European investors because we have a geopolitical product. So we didn't want to necessarily go to the US for fundraising, but there they spoke our language. There we had people that were experienced, that were seasoned entrepreneurs. So this was for us something deliberately we have taken as a hassle. But I mean, Equity Pitcher was invaluable. I wish I would be able to be more critical, but for us they were so great. They were one of the early portfolio companies, and they just really took it serious to not only be there with financial backing, but help holistically look at where potentially founders struggle, what could be issues, where can they help amplify the business venture. And I mean, for us, it was two main areas, I would say. It was the mentorship and the mental support throughout the years, but then really this network that they have systematically brought in, to the extent that they are now launching a platform where you can yourself, as a founder in the portfolio, enter your target company, and you will find a few stakeholders, really C-level typically, high-profile people, that any one of the LP of the network of Equity Pitcher can give us an introduction, like a warm introduction. And this is so powerful. So I'm a huge fan of Equity Pitcher, and I think their way is, for me, a role model how it should be really done. I've heard so many investors talking about smart and supporting, but I mean, they just live it, and we're really happy to be part of that portfolio.
I want to say I didn't pay her, but I paid her.
No.
Max, you know it's done.
Many other examples, many other examples. So happy to also.
But it's like years of work, and it's such a beautiful compliment that somebody acknowledges it. Beautiful. Thank you. Then moving on to Rico and Swisscom Ventures. What's value add for within Swisscom Ventures? Can you describe, please?
Yeah, maybe I'm super curious. Who knows Swisscom Ventures of you? Maybe quick show, raise of hands. Okay, wow, quite a few people. So probably all of you know Swisscom, and I think this is important for context later on. And Swisscom Ventures is the venture arm of Swisscom. It's not a traditional corporate VC in the sense that we do balance sheet investments that are strategic for Swisscom. We actually raised funds from institutional LPs, 20 pension funds and family offices. And in that sense, we're more financially oriented investor. However, we do like to invest in areas where Swisscom can bring strategic value, of course. Not in all, we don't have to exclusively, and I think SpaceTech is a good example of a company where Swisscom not naturally can bring a lot of value. So I would say there's two things. One is the partners and investment team that is actively engaged with the company, either as a board member or observer. In particular, in the early to growth stage phase of the company, they are really instrumental. And that's one part I personally cannot speak too much to. And then there's the second part where we have a dedicated platform team, 3 people, 1 person marketing events comms, 2 people and a team in the back as well, of course, and 2 people for business development. And that's Bernard here and myself. And we work actively with portfolio companies. And typically, it means bridging the gap between Swisscom, the Swisscom ecosystem, so also the 20+ subsidiaries. including Fastweb Vodafone. We also have cybersecurity boutiques that are in the portfolio of Swisscom that we can use as channel partners, as design partners, or as customers for our portfolio. And this is, I would say, where we spend majority of our time. And then on top of that, we also have, outside of the Swisscom network, we have about 20 cybersecurity and IT service providers and corporates that are in our network that we can use also to make intros where it makes sense. In particular, in the cyberspace, we're very active, and also robotics. I would say we have a lot, as well as cloud and SaaS. But that is right now, I would say the focus is more on cyber. Yeah, I would say that's how we approach it.
So we come to our reality check.
Yeah, I think I think the first point actually resonates really well with me because we knew, of course, Swisscom and we knew Swisscom Ventures somehow, but we always associated that with a corporate venture arm, which we realized very quickly it's not. And actually, for our case, we do high-precision gas sensors. We build time-of-flight mass spectrometers that we originally developed for space exploration, and then we found like an industrial market in semiconductor manufacturing, where we felt like this has a much more scalable market size. And we got introduced to Per Lange, who is by now one of the managing partners of Swisscom Ventures. And to me, I told at the closing event, I said it's like a bit like a love story. So it has been kind of a one-on-one connection that established in the beginning, where we felt like the value add to me came through the personal CV and the experience that he built, not only as an investor but also as an entrepreneur. And that really kind of enabled the whole investment story for us, that we felt like the focus why we wanted to work with Swisscom Ventures is that it's basically a very people-focused decision, plus of course the benefits of having like a certain size of fund and kind of the in general hypotheses of what the fund is interested in, which fit well to us.
Excellent. Do we have already any questions from the audience at this point? Right. What might be interesting, you're very you're both in the deep tech sector, so how to choose the right investor? Everybody has beautiful stories. Or also, is there something you would have loved to know before when being in a financing round and you talk to different investors and they're pitching, and then you try to find the right partner? We said in another panel, it's like a marriage, founder-investor relationship. How do you have any advice there?
I think it's a very strategic decision. And in the beginning, you might not be aware how much of a path dependency there is with the type of investor you bring on board. So is the investor seeing you as potential acquisition target? So would they want to increase the stake over time? Does this have a signaling effect on other investors or other potential prospects of yours? So all of these things I think are very important to take into account to narrow down the types of investors, the type of money you want. And I mean, in our case, we did a bit of unusual route back then. I lived in the Bay Area for some years, and I have seen many startups coming from Europe to San Francisco, trying to fundraise in their later stage, and many had like very populated cap tables. And so they had like 30, 40 angels, which is perfectly legit way many Swiss startups go around having powerful angels to help them open doors in the beginning. But a lot of the Sand Hill Road VCs were saying like, okay, but who are these people? Like, did you not manage to get a good fund? Why are these people on the cap table? And they were just like discarding those proposals, although the tech was really interesting. And like that traumatized me a bit or marked me a bit in the sense that I thought it's very good to have very early a VC. And so we wanted to go in our seed round already for VC as a lead investor in view of, on the one hand side, consolidating the cap table, have a few stakeholders only, but also have a very strong partner when we go in follow-on rounds. We are in software. We are a global play, which means we have to fish in the large pond. So it was always clear we have a capital comparatively intense product and need to compete with really large players. And so that was a bit our story. And from that point of view, it was clear it had to be European, it had to be a VC, and it was just not so common to invest for many VCs in Switzerland in an early stage company. And that's why for us, what we have done is we have done a long list with players we have seen that somehow had interesting, potentially geographical network, interesting partners that with personalities that we felt could be of great interest for us to have in the board, but also, of course, content topics that could be somehow relevant for us, industry know-how or whatnot. And then that's how we did a shortlist. And in the shortlist, we were like in a hiring process. I was contacting portfolio companies. So when we were in touch with the analysts, we asked for references. And I deliberately always asked for a startup that was one of the high rockets, high growth one, but also one that was struggling, to really have the real feedback. How are they with them in these tougher times? So that gave us, I think, a very good realistic view on how they're going to treat you, because you can never choose, like your route is not clear. There are always tough patches. And so that's what we have done. We had on their side, there were comparatively to many startups that were growing in the same time frame, had similar rounds around our time. We had a very long due diligence process because of this VC choice. So we had like analysts in the Bay Area that looked at our source code review, which was super early for seed round startup. We had like interviews. 3 founders were interviewed each 1.5 hours, like reference checks. My former peers, workers, employers were contacted. It was tough, but it was very good. I liked it. And we did actually then a bit mirror our due diligence and did the same with them. And so that was a bit our way to do it. And I think throughout the years, this strategic element becomes even more important. The more you have an idea, what is your trajectory? Do you want to have a trade sale at one point? So then it's already very useful to understand what are potential targets in your industry, what could be players. Do you want to be already on their radar somehow? Do you want to initiate a relationship with them over time? And you can play a bit with that also in the fundraising to look at potential early investments, even if it's smaller stakes, but to get to know each other, to see if it's really a fit. But also in view of not, you don't want to signal that other competitors that could be relevant for your business don't want to work with you anymore. So that's, I think, a very important balance to take care of. And I mean, in the Switzerland, it's easy. You ask other founders that work with the investor. I think here due diligence is way more easy to get the real interesting feedback. And on a global level, I think you can try to do the same. Founders typically are very open to be honest about the collaboration.
Impressive, you really did your homework. Wow.
I can agree to that. I think listening to what Sandra is saying shows me what actually, how naive we kind of approached this originally, because I think one of the learnings that I would take away is actually that I would do reference calls, not because it didn't work out well, but it kind of shows a little bit, maybe a bit more of the partner you choose to work with for at least 5 to 10 years. So it's I think should I ask?
Yes, please.
Basically, I think for us, kind of the thought that came in the hindsight, and it actually kind of builds maybe on a learning that I had personally. That like once we had Swisscom Ventures lead the seed round, and we had one of our co-investors is Spectrum Value Management, which is the family office from Thomas Schmidheiny. So we felt like, okay, so on the one hand side, we have now a certain credibility, right? There's a certain governance structure in place, and we have been vetted by the due diligence, which has been also a very intense experience. And we felt like for the next 2 years, we have kind of the path laid out for us. But to me, obviously, it was like in the beginning, we had also the partner call with Swisscom Ventures, where Alex talked about kind of capital allocation. So he said like, or in theory, kind of we could go to up to 30 million, he said at the time. And I felt like, okay, that checks my box. I mean, I will not need more the capital than that. Little did I know that kind of in the bigger picture of fundraising and kind of how the collaboration with investors go is like there's a little bit like a hacking order, I guess, in terms of like you start off maybe with a few angels or like a pre-seed VC fund, then and that's usually a bit regional, and then maybe you go and work with a large VC fund from your country, and Swisscom Ventures being certainly one of the biggest, I guess, with the focus that you have. And then maybe as a next step, kind of you try to win an international investor and like a pan-European or maybe a US-based investor. And as this kind of goes, also there's like this expectation that, of course, from an investor's perspective, you guys need to like price your assets that you have in the fund based on external feedback from other investors that also take a look at the company. So what I realized was like once we kind of started to look for new funds, I felt like I just need to like pitch the traction and show you guys where we are, and then there's just like an extension of the ticket, and off we go. We don't need to start from zero anymore. And I mean, in reality, we didn't need to start from zero, but like the fundraising effort that we have, and kind of what makes this also very important in terms of the value add of the investor that you choose to work with, is that there's always going to be a next round or an exit process. And I mean, investors know other investors. And for me, that has been, on the one hand side, very eye-opening, because it didn't stop by basically winning Swisscom Ventures over, but it's been basically like an important stepping stone to the kind of next stage. And we're currently preparing our Series A, which we expect to close end of the year. So, I mean, with that, it's tremendously helpful that our board members from the fund and so on know other more international VC funds and so on. And the intros, sometimes they need to be warm intros, because you simply wouldn't be recognized if you do like a cold call. So, yeah.
And talking about, for me, this is one of the most important topics to add value. I don't know, do we have startup founders in here, or is someone? So it's like, on the one hand, I can say with my own experience, when I need fundraising for my own, but I'm still unfortunately not at the stage where I can decline any investors, but I would love to sometimes. And I think most startups have this problem that they can't choose. Because for me, it's really, if you have the possibility, just go for your gut feeling. I mean, you have so, Sandra and myself, we work together now for 9 years, 8 years, something like this around. And it's a really long-term relation at the end. And if you already start at the beginning and see, that's a difficult person here I have to work with, in general, it becomes hard the next years. So that's the one thing. And then where we really try to bring in our value to the startup companies when we invested in, is to choose the right investor. So we really help in the fundraising process. We really help to make the introductions to potential investors. We think that's a good fit for the startup company, and to really create this funnel that there's a possible choice of investor. So because it really will help out. So if you have like it's the one, he gave me this 1 million and I just need it. So it's our experience, it's not always the best thing to do. But again, sometimes you can't choose. So it's not that it's always the possibility there. But if you have the possibility, it's really helpful that you go this criteria, do your due diligence, and then really use your existing investors to open doors to other potential investors.
And I think what Sasha says, and based on Mock's feedback, also is very useful, because your investors have worked maybe a few years with other VCs, so they know exactly which are the good people in that board, which are the good partners. And I think that juicy detail can make all of a difference. It's not just like intros is cheap. You can get intros from people, but like you have a qualitative tag associated, they can already see if this could be a good fit, and that is invaluable, I would say.
And for me, still the most valuable experience is, it's really not about the money always. So it's like, I know it's so, if let's say an American investor is offering you like a crazy valuation, and you think that's on one hand really an honor. On the other hand, you really have to think, hey, is this the right partner for the right moment I'm with my startup in? Because, yeah, you only have this one shot. So if it doesn't work out with this right investor, it's becoming hard.
I think one other criteria that I also learned over the years, but I was not so aware in the beginning, or not, I mean, I knew, but it was not so top of mind, is really also where are investors in their own fund cycle? It's like, do they urgently need an exit? So are they prone to potentially push you too early to sell? Do they just have a lot of cash to deploy? They just recently closed. Are you a missing piece in the puzzle of the portfolio? So how strategic are you? Like, what are you potentially? And so this will be very valuable to know in the years to come how they will react. Because you want someone on your side and be able to take very strategic decisions in the company's interest, not in their own fund interest. And I saw there are a lot of clashes with other friendly co-founders that sometimes were pushed maybe to do things which most probably would have been better for the company to wait a few years to do a better exit later. Yeah.
You get the full picture. Would you like to add anything from your perspective, or shall we move on?
No, I think I can only agree everything that has been said. One thing that I would be curious about, you were super strategic in how you approached this. Did you also think about what could be potential co-investors that Sasha had in his portfolio that could be relevant for you down the road, or is that something that just sort of...
Not yet, because they were fairly early. We were super early in that they invested in us. And no, I didn't think that was true. And I'm honest, I was also desperate. we were so frustrated.
So you were
because
lucky then.
This experience was so miserable. We had so many conversations where people didn't understand digital identity back then. Nobody understood what was like cryptography. We had people from all different industries, but we were very judgmental. So what I missed a bit, I knew from the US, investor conversations are very open-minded. People are open-minded. They're empowering, even though they would not invest. They're opening doors to say, hey, I love your topic. You should talk to this and this person. I know them. They might be able to help. In Switzerland, no, we don't think this is going to work. No, we don't believe there is a market for that. Oh, there's already an American. I've seen one American vendor that can do that already. No, I don't believe in this. Like, it was miserable. So we were a bit desperate that we already opened our horizon to foreign investors because of the sheer feedback, with the exception of Equity Picture.
Okay.
And
It can only get better when you start in Switzerland.
It was also desperation. It was not just like a strategic move.
It's super interesting that you say that, because I mean, from a platform team perspective, you can see such a big difference depending on the nationality of the founders. So you have a lot of, I mean, we do 50% of our investments abroad, so we have a lot of Israeli and US founders, and they're very often super cocky. And even if you as an investor, you haven't even decided that you want to go with them, they already come in with an attitude where they're like, you know, we're sort of contemplating, there's so many different investors that are interested, we really want to go for strategics, and so kind of, what can you do for me? And then you already have to get active, and you have to activate your network, and you have to sort of prove that you can be a value-add investor, while I feel like in Switzerland, and I don't want to speak for everybody, this is a generalization, of course, but what I have seen is that a lot of founders are more, I don't want to say desperate, but they certainly not as cocky and not as confident in terms of also demanding something from the investors.
So does it work, the cockiness?
I think
to a certain point, yes.
Is there a bit of FOMO that they're activating with
ultimately, I mean, the due diligence process will show whether the company has substance, whether the founding team is good, whether the industry is good. There will be lots of reference calls. Cockiness alone will not get you there. But you might be able to extract one or two valuable intros with that. Okay. So, yeah.
Good learning.
Could be a recommendation for our Swiss founders.
I think, I mean, maybe I add a little bit. I think it also depends a little bit on the product that you have. I feel like I hear so many like of these stories in the sense of like you have like a product where you have several competitors at the same time, and whoever's more effective eventually takes the market, and it's not the best product, but it's basically about your execution ability. And I think in some way, like it's personal marketing and kind of the behavior that you have, where I feel like this is actually needed to win, like ultimately the best investor. Sometimes I try to look at this, and I mean we do hardware. I mean, we have a strong hardware component, but we create value through our software product. And then there's like in these discussions, I sometimes feel like when we talk to investors, it was kind of this very narrow niche of people that understood what we do and kind of can talk to how big is the market and so on. And I just had to come to grips with that, right? It's like eventually you don't need, as a founder, you don't need 20 VC funds that they overbid each other for your term sheet. But it's really ultimately the one for that time and this place, right? And also, like 2 years down the road, the constellation might also change again. So for me, it's always been also about the chase for the right person that ultimately believed in this. And funnily enough, I mean, with Per, for example, I mean, he came in, and by now it's 3 years ago. So he looked at this and he said, like, I think it can go like in that direction. And I always felt like, yeah, I mean, if we're lucky, maybe, you know. And I didn't necessarily. I didn't tell him that at the time. But I feel like now looking back 3 years ago, I'm quite amazed actually by the fact that like our product needs to become an integral part of a machine to really scale, right? I mean, we have a retrofit solution that you can buy from us, and we bring that to your factory, and you connect it to the machine and in place, and basically you run a retrofit, or you basically get fully integrated. And we are now at the stage, since the beginning of this year, we have an OEM who reached out and he said, like, okay, we have been kind of asked by the foundry to integrate you. This is, I mean, we have these 3 machine types in mind, and we're working now currently on the integration. And it just amazes me by the fact that, like, when now we go out and fundraise, right, with that additional sign also available. And I'm just quite amazed by like how this relationship also with Per worked out in the end, to that he kind of like like there was a board meeting where he said like, yeah, I told you, right? And I said like, great, I mean, fantastic. I mean, it's been really like he knew something, or he saw something where I was not fully convinced myself at the time. And I'm glad that I had someone actually who believed in us at the time. And what we then did with the money that we got is basically work hard, right? Head down and hustle, and basically try to make it work. And yeah, I think that's also talking about smart money. I think it's very often also about like the timing that you mentioned is absolutely crucial.
Maybe one other thing I learned along the way, and this was also tough for us, to find someone who has done this before. Ideally, like in the US, you have a few seasons fund where they're specialized in cyber, they have seasoned entrepreneurs that have reinvested in the fund themselves. So it's really a knowledge transfer of people who have done B2B sales in cyber. Here, we didn't have anyone. There was no exit back in the days. Now, we have a tiny little flame starting to burn. But this is so valuable, because you hear from potential investor conversations. We heard things like, yeah, there's this other American player, you're never going to make it. They're way more loaded on cash. Whatever you're going to raise, it's not going to work. And cyber is not a winner-takes-all market. And just this, if you're a young entrepreneur coming out of ETH and hear that and believe this person, you maybe stop your venture. And it's so wrong. Like, I think it's very important to also filter who is telling you feedback. It's very biased where it's coming from, and check like what gives them the entitlement to make such statements. I think that's maybe also feedback I would take at heart.
And it really comes back to this know-how, because Per in our team is like the semiconductor pope. Yeah, the others don't get it, but he's like really deep in the topic. For cybersecurity, was you found people that finally understood it. You mean so it's know-how, and then also the encouragement. Final round. What's your most important recommendation or advice you would give to the audience?
Okay. I was thinking about this, and originally I had like this metaphor from like buying real estate, where it's basically all about location. So I basically would have gone with, in our case, with people, right? Because at the end, it doesn't matter like the brand or whatever. It's kind of really who you work with. But I wanted to add, like, after the hearing also the inputs, I wanted to add one small thing, is that like I think the biggest learning also is that like issues with fundraising in the beginning, they don't go away no matter who you choose, right? It just changes and it evolves into different issues, right, that you tackle. And I think this is also a very, I mean, to me, like a very important point to highlight.
Yeah, I mean, my recommendation is more focused on if you're dealing with a platform team. And I mean, for you, obviously, you all have a handful of customers, right? So we didn't really engage that much. For other companies, like our security companies that are more in need of channel partners and customers, or that potentially have a collaboration with Swisscom, we work much more closely with them. And for those of you who are engaging with a platform team or a business development team, just make sure to actually speak with the people before you engage with the company, and don't just trust the stories that investors will tell you. Ask also for references. I think that's probably the single best thing you can do, and not just maybe for one company, but also pick a company yourself. And I would also say maybe pick a company that is not the star performer, because it's almost much easier to help the really well-performing companies. And then see, and one thing that I think is super important, see how transparent are they. Do they just, tell you everything is possible, don't you worry? Or do they actually caveat that as well and basically are telling you, let's focus maybe on these few areas where we really can add value?
Yeah, I would second the people is everything. I don't like this marriage analogy so much, but I really trust your gut feeling that the person that you have in the board is someone that shares the passion for your topic in the long run. It's like that's the right motivation, that they're passionate to believe in your capability to bring this vision to fruition. I think that's would be for me the number one thing I would do.
And I already mentioned before, for me it's really that choose your cap table wisely. So it can help you a lot, and it can also destroy a lot if you have the wrong people on the cap table. And we see this now and then, and it's really a pity if you have a good performing team and company and you just have an investor in it who's blocking everything and things like this. So it's like, a lot again from the gut feeling is coming from the beginning. You will feel this.
Thank you. Questions from the room? Yes, please.
Or maybe I just speak loud. Okay.
You've got a beautiful voice.
Just to follow up on your question regarding the cap table towards investors, like how open are you to secondary? Because like the right investor today, who might bring in a lot of value today, might actually bring in negative value like further down the road. And I think like even like also Sandra mentioned, like with this marriage analogy, like to some extent it's getting like married, but not like when you're an adult, but actually when you're a small child. Like you have no life experience, you have big dreams, you have an idea, you want to do something, and now you need to get married. And I think like it's very crucial.
It's a new one.
It sounds on time, and for me, it's like the question is really like, okay, how open are you as an investor to at some point like let go or like take or have someone take over the shares to continue grow the company?
Great question.
So I can say from my side, it's one of the big parts Switzerland is missing still in the cultural thought, that there need to be like a secondary culture like it is in the United States. It has to be normal that a business angel, seed investor can go out after there's coming a Series B and further. So it has to be really normal, because also that the money is flowing again into the new companies, because otherwise all are stuck on the invested capital. And on the other hand, it's just for the startup. I mean, if I invest as a business angel in a company, I can't bring the same value when it goes to the institutional investors. It's so easy. And then it can make sense for me that I just sell my shares to a good price with a good multiple, and there's coming in the next right investor. And of course, if that's a wrong investor, it's anyway, the faster you get rid of him, the better. It's like this. I can make you an example. We are just doing or want to do a finance round with the Swiss company, and they have like an Italian billionaire in the cap table. So he was one of the pre-seed investors. And he's just really blocking the finance round because he wants to have like a veto right till a 10x multiple. It's completely crazy. So every institutional investor will tell you, hey, there's no way that we will accept this. But this guy is really blocking everything. So for the founder, this can mean that his whole company will go to insolvency, or perhaps he will finance and bridge him a little bit more. But even this, I will doubt. And then you have like, killed your dream in a way because of the, again, could he have done another decision back then? Perhaps he was the only one who gave him money and he just needed it to go to the step in this stage. But it's like, it's one of the bad examples you can have. And so, again, you don't see in the future and you don't know how things will evaluate, but if you feel, hey, there's a way, because we also offered him, hey, just sell your shares, we will buy out as a secondary. And then it can really make sense.
Also, from the other perspective, it makes sense. Like, for a founder, I would claim that you're more committed in the long run to stay in the company if you can get some money out to live a comfortable life. Maybe you have to take a mortgage or you have a private life, whatever hobbies. And I think there's still a bad connotation for many investors in Switzerland. I hear a bit, they just want to get out. And like they have seen it now. And I think it's wrong, it's not true. I think founders, it's just fair that they can diversify also their risk and their assets. And it doesn't mean anything that they're less committed, in my view. So I think it should be more common.
Yeah, I can only second that. We see it actually quite often. It's a completely normal thing. I mean, of course, if you get in and the founders want to sell 50% of their share as secondaries, I mean, that might be a red flag, of course. But apart from that, it's completely normal, I would say.
Yes, please.
Just to add to the secondaries, so how do you see it when the company is at the same time raising funds? How much would you allocate for such a secondary? Or can you do a secondary at the same time?
Yeah, usually you do the secondary at the same time because then you have a price tag and then you can work around this price tag regarding the secondary. So it's not unusual. But of course it has to fit. So I mean, if you just receive looking for 10 million and 8 million should go to the secondary, I think it wouldn't make sense for you. But the other way around, I think that's what you typically will see and find then. That you can just say, hey, a part of that. And usually growth investors are open to buy secondary shares, and then they say, hey, we want to lower our price a little bit and that's good for us, clean the cap table. Especially foreign investors have this mindset.
So my experience was that it was a bit more challenging to sell shares in the midst of a financing.
Because they said they want all the money in the company, or what was the reason? Yeah.
The new investors or the existing shareholders?
Existing shareholders. I think new investors wouldn't really
exactly.
buy your shares.
Yeah, again, it's a cultural thing, and it's like, I'm also a fan of that founders sometimes really get like a cash injection through a secondary, if there's a possibility, because it's you are always on the edge, to how do I pay my rent, and I have to work 24 hours, and if you already brought in 5 or 10 years of your life, it's okay if you have like at least something. It shouldn't be that you can just go relax and go to the Bahamas. It shouldn't be, because you still need this motivation and this energy and this fire to really bring it to the target. But to have a part on the account of this whole amount, in my view, it's okay.
And I feel also from the personal side, it's much more healthy, because if you sell it and then you stop from 100 to 0. Talked to 2 founders yesterday. They don't need to work anymore for money. But they felt both of them, they said they felt into a complete hole, because first you're super stressed and then you're like, nobody needs you anymore and calls you, and you're like, you have free time. You need to find a new reason what to work on. So it's, Any more questions? Last one? Then thank you very much.
Thank you.
Thank you.
Thank you.